The ceasefire has been extended, peace talks continue, and tech stocks are celebrating. All this and more in this week's episode number 25 of my investment journey. But before we talk about all the things that moved the market this week, as always, let's go ahead and make the trade. And again, as always, we are making the trade of investing 1,000 euros in the MSCI emerging markets. Let's review the order. Buy now. Boom! We got it. Okay. And what does that mean for our total portfolio? It is at 27,600 right now. Amazing. After having invested 25,000 in total, we're up more than 2,500 euros before taxes, of course, and that's only paper gains, but still very, very encouraging. Especially today, there seems to be a big jump. 700 euros profit alone today, or almost 3%. And so let's look at the bigger picture here. We can see a lot of volatility, a lot of up and down. So here we are up 500, down 300, up again 500 over the week. So really encouraging results here. Over the month, we actually have a 10% increase. So the fastest rebound you could have imagined. Very, very positive development. And you know what? Actually, now I feel bad for not having invested more while there was a dip and I had an opportunity to buy cheaply. But of course, I cannot really complain. So with that, let's look at what happened in the markets. So what we see when we're talking about markets reaching an all-time high is that not all the markets reached an all-time high. I think everyone was influenced by the S&P 500, who actually did reach all-time highs, but the MSCI World lost a little bit. Still, they're very high. The MSCI emerging markets, on the other hand, did gain a little bit and did collectively reach an all-time high. So let's check out what happened last week. What you can see here, let's take the US as a proxy as always, is that there was positive economic data, ongoing strength in AI stocks, and upbeat earnings. And that helped offset the, of course, bad situation and the continued uncertainty surrounding the US-Iran conflict. One of the things that happened was that a lot of companies, 20% of the S&P 500, had earnings reports this week. And 84% of those companies that reported this week have actually beaten their forecasts. So that's a very positive sign. Also, US retail sales jumped by 1.7%. Yes, that's driven by a huge surge in sales at gas stations, but without that, it would still be a healthy 0.6% gain. So good economic data, but that is of course always to be seen in contrast with the geopolitical situation. What else do we have? Europe didn't fare so well, so the Euro Stoxx 600 is down 2.5%. Some sectors held up better, such as defensive sectors and utilities, but basically the Strait of Hormuz being closed really dragged down most of the indices. So German business confidence plunges to the lowest level since the pandemic. French consumer confidence falls sharply in April. So a lot of not so good news out of Europe. Japan did reasonably well, similar situation to the US. AI and tech provided a boost, but there's of course some drag from the Middle East war. Lastly, let's look at China. Here, the equities were broadly stable over the week, consolidated gains from the prior week. Policymakers also signaled confidence in the current growth trajectory despite lingering external risks, and that materialized in leaving the benchmark lending rates unchanged for the 11th consecutive month. What China's President Xi called for was reopening of the Strait of Hormuz. So he was talking to Mohammed bin Salman of Saudi Arabia. And he said, please, let's go ahead, immediate and comprehensive ceasefire. So let's talk about the Iran situation. Right now, the ceasefire has been extended by, I think, another 3 weeks. Jared Kushner and Witkoff, they went to Pakistan for direct talks with Iran. This time they didn't bring along JD Vance, the vice president. Let's see whether that helps. The problem is the situation is complicated even further because in the meantime, Iran has deployed more mines in the Strait of Hormuz. And once the mines are out there, they're not easy to remove. You need minesweepers. Sometimes they even lose track of where the mines were. And so even if you have an immediate peaceful resolution, it's going to be tricky opening the strait and guaranteeing a safe passage. And so the question that's being asked now from a lot of countries is, how long can we last while the strait is closed? And one concept that is quite relevant here is the strategic reserves of crude oil. Every country has some strategic reserves, and depending on how large these are, you can either last longer without importing oil or shorter. And so here you can see the oil stocks of IEA countries. So this is the International Energy Agency. And this is from January, so before the war started. And a couple of countries here are net exporters, which means they're technically not dependent on imports, so they can just keep exporting as long as they have actually proven reserves in the ground. But that doesn't mean that they're unaffected, because oil is a global commodity, and if prices rise globally, then it will also be felt at the gas stations in the United States. But the other countries here, you see that they have very different strategic reserves, and this is in number of days. So for example, Austria has 112 days of oil left if nothing comes in here anymore. And so that puts some countries in a pretty tricky situation here. So a couple of countries might be fine. Japan has quite large reserves of 230 days of reserves, but India with 10 days is a bit more in trouble. And for some countries, we're really getting into crisis mode. For example, Bangladesh. They face a severe fuel crisis, critical shortages, long queues at gas stations, horrible situation. Philippines, they have the same situation. So they are extremely dependent on imports from the Middle East. They import 98% of its oil from the Middle East, and closing the Strait of Hormuz is really bad news for them. But even countries that aren't technically running out of oil, they still have to take drastic measures. Look at this. Germany, Lufthansa, the national flag carrier, scraps 20,000 flights. So they scrapped 20,000 flights due to soaring fuel prices. So that means even if they have the fuel, it's just getting so expensive that certain flights, certain routes are not profitable anymore. And so then the German government, together with the aviation industry, is discussing how do we, in a case of a real shortage, if we're running out, deploy the remaining kerosene. And so that can go to vacation flights for private citizens, but it can also go to cargo planes. And typically, cargo is more important because the whole supply chain depends on it. And if you disrupt that, you have way bigger problems down the line. And so while everyone is hoping the Strait of Hormuz will be open soon, there are also some alternatives that offset the situation a little bit. So one of the things that's happening is there is a pipeline from east to west across Saudi Arabia, where you can bypass the Persian Gulf here, and instead you can go into the Red Sea, where here, over the Suez Canal, you can ship to Europe. You can also go down here, but typically, most of the stuff goes through the Suez Canal, so Europe is relatively well off because that pipeline actually delivers 7 million barrels a day, and that definitely offsets some of the 18 to 20 million barrels a day shortfall. Now you have, of course, terrorizing the Red Sea, the rebel group Houthis. They're operating from Yemen and they're supported by Iran. And so that's another way of Iran pressuring the global community and the economy to pass on that pressure to the US to stop the war. And a second pipeline bypassing the Strait of Hormuz is the Habshan Fujairah pipeline. Hope I say that right. And that basically goes from Abu Dhabi through Oman, and that bypasses the Strait of Hormuz. So this is here, the Abu Dhabi crude oil pipeline. So you don't have to go through the strait, you can actually go through this pipeline. But that, of course, is not that much. So I think it's only like between 1 and 2 million barrels a day. But if both of those pipelines are operated at full capacity, we can almost offset like half of the shortfall caused by the closure of the strait. And that, of course, extends the remaining days of oil stocks that all the countries have. In any case, it remains a tricky situation. I will continue to observe it and explain to you the implications for the market, and hope to see you next week when I make my next trade. And until then, all the best.